It may take Iranians as a nation 3 years to catch up with powerful Western economies in playing at stocks and shares as a daily activity. But in the number of Iranians making it their job for their livelihood, there has been a sharp rise. Some 12 million have so far registered and received shareholder codes, 500,000 of whom are active participants and traders. Iran's economy has taken blows on all fronts, but its stock market, you'll be surprised to hear, is booming. In fact, its main index, the TED-PIX, has soared tenfold in 2 years in local currency terms. And since the government announced the lockdown late in March, it has doubled. It sounds almost unreal, but experts I'll be presenting on the show beg to differ. I'm Leila Farumarzi and you're watching Iran Today. Do stay with me for the next half hour. The TED-PIX is the world's best performing index even when measured in hard currency. But the meteoric rise of the market is detached from the underlying value of the assets traded there. And with gross domestic production down by nearly 9%, the situation looks like a stock bubble waiting to burst. Our market analyst, Dr. Setak, however, finds no use for bubble even as a word.
It is not possible to speak in one word about the presence or absence of bubble in the stock market, where there are numerous financing instruments and many shares. There are more than 600 stock exchange indices and dozens of financing instruments defined based on those indices. The stock market may experience a bubble partly. However, it has not happened in big and fundamental shares of the capital market. It would not be professional to speak generally of bubble in the stock market, and it lacks any scientific standing. Generally speaking, after each period of growth in the capital and financial markets, everyone starts speaking about bubble in the market.
Iranian President Hassan Rouhani referred to disbelief on the part of Iranian media abroad, insisting that the situation on the Iranian Stock Exchange has improved and is good, because all the companies and economic actors have made an effort, and fortunately the shares of the big public companies have been offered in this stock exchange for private investors to buy at a discount rate. Dr. Rahmani is an economist and former bourse manager. The remaining shares of some governmental institutions have been offered to the public. Do you think it's a good path the government is going down, getting involved in the bourse, in the stock market?
Listing state-owned shares on the stock market is a must, and it should have been done much sooner. In the main instructions from the leader, it's been said that Bank Milli and several other development banks remain in state hands and the remaining banks be privatized. However, by that time, the government decided to hold 20% for itself. It has privatized 16 to 17% of Bank Sadarat, Bank Millat and Bank Tijarat. But it was a previous obligation to privatize the banks. However, under the present circumstances and the current year budget obligations, the government has to privatize its assets. The government is benefiting from this opportunity, but the privatization of shares is not done directly to people. Exchange-traded funds, or the ETF, have been formed for this purpose.
In offering public company shares, the government is saving the value of loose cash people are holding onto, at times astronomical sums. The thing is, with an inflation of some 35% and the value of the Iranian rial dropping, there is little incentive to open a savings account when the interest rates have been decreased to 15% from over 20%. Alternatively, Iranians would normally invest in hard foreign currency, gold coins and real estate, but those have also lost their allure. So with recent incentives provided, the stock market it is. Dr. Abdul Maliki is an economist from Imam Sadiq University. Let's hear him out. How effective might the capital and stock market be to Iran's economic growth?
Besides the financing, the production and employment, the stock exchange market in Iran has played a very important role in controlling the inflation. You know, the liquidity amount in Iran is very high. Some experts and some economists say that by actually moving this huge money and liquidity into the commodity market or exchange market, the price of the dollar or the price of the commodities will increase very highly. But in the last years, this stock exchange market actually had a very important role in controlling the inflation by moving a huge amount of this liquidity and money from the commodity market and some other parallel markets to the stock exchange market.
Not everyone believes the government's intentions are fully unselfish, however. There are suspicions that the Iranian administration, pressed by US sanctions, first boosted the stock market last year, only to lure in investors and then cut the interest rates when the time's right this year. Given all said, would you say it's a good thing the government involved itself in the stock market, selling its remaining bank shares and stuff, or not?
What has happened has had advantages. First and foremost, it was a suitable response to the flood of demand. It was the right moment. The stock market had reached a stage where there was a kind of thirst to buy stocks. Therefore, the supply side should be also boosted. But the supply side could be effectively strengthened only by the government. That would deepen the capital market, in which case hidden hands would come and set prices. When the supply and demand set the prices, nobody would protest, because there is no command system for pricing the market mechanism, and the market itself determines the prices.
It is Article 44 of Iran's constitution that foresees privatizing state-owned companies. In accordance with Article 44 and the Budget Law of 2020, the Stock Exchange High Executive Council approved the offering of the remaining shares of state-owned companies in the capital market. And days later, in early April, a decree was presented to that effect by the Minister of Finance to the first Vice President. The best laid plans of mice and men. What if the stock market does crumble? Will the government be able to pick up the pieces to put together? So far, it has involved itself in the stock market by offering up its remaining shares in 3 banks and 2 government institutions for private investors to buy at lower rates. But the question is, was this done solely from a position of power? And how far can the government go to help out? The aforementioned banks are Sadarat, Millat and Tijarat banks, and the institutions are Amin and Albor's insurance companies. But it won't stop there. The government did generate nearly $4 billion revenue by offering up 10% of Shasta or Social Security Investment Company shares to the public mid-April. The initial public offering of Shasta shares on the market was made in mid-April, in the early hours of the 14th to be exact. The maximum quota for each stock exchange code was to be 10,000 shares with a price ceiling of 860 tomans per share. This meant each buyer could purchase 8,600,000 tomans, or under $500 worth of those shares. The initial public offering of Shasta shares, 6,700 million shares, is the largest initial public offering in the history of the Iranian stock exchange. Now it's some 8 billion. But what does Shasta comprise exactly? What's the importance? It has 187 subordinate management companies, 82 of which are Bourse companies. Some holdings under Shasta are as prominent as the shipping company, Ritel Mobile Operators, Tamin Oil, Gas and Petrochemical Investment Company, and Tamin Pharmaceutical Investment Company. With a closer study of factors at play, it would appear stock market success is a matter of pride and necessity to the government, which has since 2006 begun laying the foundation for privatization of deadweight public foundations.
If the support is given through laying the groundwork for directing the liquidity in the society towards the stock market, I may say that yes, it's a good support. Liquidity in the Iranian society is high. The ground has to be prepared for the money stockpiled up in the society to flow into the stock market, but it needs all-out support. But if every organ at any level intends to meddle with the stock market affairs and the supply and demand system, that market will in the long term suffer losses.
Plenty of other public bodies are also to have their shares sold out with a 20 to 30% discount. And buyers will include some of the lowest income people in the country. People who were given justice shares on the stock market. How will this happen? By exchanging their justice shares with shares of big public enterprises.
You must know that any jump in production requires capital accumulation. The shortcoming currently in the market is that aside from the government supply, which would partly go to development projects, the companies should also increase their capital and introduce new shares. That process would transfer money from people to companies. That would lead to capital formation, which would bolster companies. We wonder why company managers are not benefiting from this opportunity, and their major shareholders should increase their capital.
Justice shares, by the way, are worth up to 370 trillion tumans, or some $21.3 billion at the free market rate, the head of the Iranian Privatization Organization has said. The official government rate of the dollar is 4,200 tumans to the dollar, and the actual market dealing rate is 17,300 tumans to the dollar. Why does Iran's stock market not follow the global trend?
Stock markets function on round-the-clock basis. They start from one point in the world and arrive at important stock markets from hour to hour before they return to the starting point. In light of our geographical position, the Tehran Stock Exchange merits being the decisive index. But unfortunately, our capital market is not decisive, and our southern neighbors are key indicators. We have no specific communications with world stock markets, and therefore whatever happens there does not directly affect us.
Time for a short break. We'll be back in no time. The exchange traded fund to offer up government stakes in banks and financial institutions may soon extend to national mining, steel, and petrochemical holdings. The trend is ongoing, and the plan is to privatize public companies by 20% each year.
In all societies, efforts are focused on moving money stock towards their stock markets. When the money stock goes into the stock market, it has to benefit the entire society. You can see that even for immigration, injecting money into stock markets would facilitate the process of migration. This is because when assets are injected into the stock market, the society would enjoy numerous advantages, which would in the mid-term and long-term help job creation. When money is injected into the capital market, in the worst-case scenario, some parts of the stock market may experience bubbles. What would happen then? The same companies present in the stock market would see the prices as overvalued, and they would start selling their stocks to be able to revive their company or establish a new one. That would contribute to jump in production and job creation.
Let's not immerse in speculation. Facts on the ground are looking at the capital market to compare years. We see that the value of stocks traded on the stock exchange in 2019 increased by 232% compared to 2018. 2019 has in fact birthed the most profitable market in Iran. The total value of Bourse and Faraburs dealings reached 6,950 billion tomans as of 25th May. That's more than $400 million. Also, the total Bourse index dropped by 21.222 units, which places it in the channel of 965.536 units, just under a million units, that is.
The capital market is now under strain from high liquidity. When I was head of the TSE, trading 40 billion Iranian rials was good. In August 2008, we sold the telecom stocks. From that time onwards, the trading volume has reached about 5,000 billion rials. But now, this volume has reached 220,000 to 230,000 billion Iranian rials.
It's time for a quick break to see what the world media have to say. For that, I give you Shahzad.
Hi, I'm Sharza Manucheri, and this is the news section of Iran Today. We'll be looking online for the latest update on Iran's booming capital market and its prospects. Tehran Times reports TCC IMA head calls on government to increase IPOs in stock market. The head of Tehran Chamber of Commerce, Industries, Mines and Agriculture called on the government to increase the number of initial public offerings, IPOs, in the country's stock exchange. Making the remarks during the first meeting of TCC IMA's Board of Representatives in the current Iranian calendar year, which began on March 20th, Masoud Khansari also said we anticipate more realistic prices as well. He further noted that if the government transfers just the shares of state-owned organizations and companies, but the management will still remain in his own hands, it will create some problems in the long term. Khansari mentioned Shasta as an example in this regard and said in terms of Shasta, we saw transferring of shares, but not the management. The Middle East Eye claims Iran's stock market is booming despite warnings of bubble burst. Despite the severe economic woes and reports that low oil prices and reduced tax revenue will further intensify the government's budget deficit, the IMF forecasts that the budget deficit will reach 15.7% of gross domestic product this year, up from 10.6% in 2019. The Iranian capital market continues to grow. Many experts see government support for the capital market and other monetary policies, such as the recent reduction of interest rates, as part of its plan to shore up the economy. The continued growth of the Iranian stock market, which seems to contradict all the economic fundamentals of the country, has raised the eyebrows of some experts and officials alike, as they warn of a huge bubble that could lead to a new major social unrest if and when it bursts. In an article by the CS Monitor, we witness why Iranian stocks are up 225% this year. Thanks to privatization, Iran's stock market has resisted the economic pressures of falling oil prices, the coronavirus, and US sanctions. The Tehran Stock Exchange has seen gains of 225% in the last year, with sharp increases even as the country struggled with one of the first serious outbreaks outside of China. Encouraged by a government eager to privatize state-owned firms, average people now have access to the market and can trade shares, earning returns they'd never see in a savings account or a certificate of deposit. As Iran's bourse has developed, our enemies become nervous and ask why the market is developing while markets in the world are in chaos, Iranian President Hassan Rouhani said at a cabinet meeting last month. The rise is because of efforts by all companies, business people, and fortunately offering shares of big companies to the stock market. That's all for this segment. We'll see you next week.
I said other markets, such as the foreign currency market, had lost their allure. That's because to control the black market and rate of the dollar, the government has made it hard to buy foreign currencies. Also, US sanctions put global stock markets abroad out of reach. And so Iranians turned to buying land or cars as investment, but prices are now too high for most. Still, why would they opt for the stock market as their safe haven when dealing in stocks and shares can have the allure of gambling? However, played safely, it can be the best way to make a definite, relatively quick profit safely. Just remember, avoid temptation and don't rush it. In Iran, with banks lowering their interest rates, there's been a rush for investing in company shares, which is why experts have been lined up to guide the layman. Rule 1 is hold on to your house and car, no betting on those. Also, you best invest half your capital in fixed income bonds.
توی عالم مالی و اقتصادی
In the economic and financial sector, there is a principle on risk and return homogeneity. We know that the capital market is naturally replete with risks, and therefore its yield is much higher than other markets. We cannot claim it's a secure and safe market where nobody would suffer losses. However, it is linked with the perspective of investors. It is by no means a safe market in the short term, but we can learn from historical data to see that the capital market is a progressive one in the long term. Even if we refer to data about market crashes across the world over the past century, we will see that after each collapse, the market has become afloat again.
The Bourse now has a market cap of more than $200 billion, and its daily 5% gains haven't gone unnoticed by newcomers to the market. The stock exchange has of late been very popular with Iranians wanting to invest in something. Why so?
As you know, Iranian people during the last year saw that the stock exchange market of Iran has been economically more safe and profitable market for the investment. Firstly, the auditing rules and controlling procedures of this market has been enhanced by Iranian economic authorities during the last years. And secondly, relative to the rate of return and the capital gain, this market has been a very good. And as you know, during the last year, the rate of return in this market in average has been about 300%. So Iranian people see that this is a good place for the investment. Both it's safe and its rate of return is very good. So they are attracted to the stock exchange market, and a huge amount of the liquidities are coming to this market.
All said, the president believes it's not just the stock market that's improving, but also other macroeconomic indicators such as point-to-point inflation and annual inflation. This is why the corona crisis has sent global stock markets swinging. It has also sent US unemployment surging to 14.7%, a level last seen during the Great Depression. Corona is for us all, and the toughest ever US sanctions are Iran-specific, so this country has suffered on both counts. But while there's no vaccine for COVID-19, there has been for Iran's economy. The US's economic war against this country and its oil industry has helped us develop an immunity, even if partial. And this is while the world is reeling in the pain caused by lowered oil prices as the coronavirus brings global markets to their knees. Benchmark Brent crude prices, which were over $70 a barrel a year ago, are now at just over $20 a barrel as demand collapses amid an oversupplied market. It's a matter of immunization and the Iranian individuals' flexibility and endurance that's kept us alive. How has the corona outbreak affected the market?
عدو شود سبب خیر در خصوص بازار سرمایه اتفاق.
Bad luck may sometimes bring good luck. It applies to the stock market. Due to our oil exports restrictions, our relations with the world were different from those of other countries. Therefore, we managed to handle the problem more easily. Oil prices slumped sharply, but as our oil sales were very low, we absorbed this shock over the past 2 years. That is why, due to the oil price slump, many capital markets have run into trouble. Furthermore, we had already grappled with sanctions and we knew how to live under tough conditions. The COVID-19 outbreak did not inflict as much stress on us as did on other nations, or at least we were experienced enough to deal with such conditions.
A shrinking economy doesn't seem to bother Iranians anyway, as they'll invest in whatever opportunity the day presents. How have sanctions directly and indirectly affected the stock market, is what I next asked.
You know that a lot of economists and a lot of experts in Iran and in Western countries say that economic sanctions will induce a very huge inflation economy because by moving this huge amount of liquidity to the commodity markets and to the exchange market, the price of the foreign currencies such as dollar and euro will go very fast and will go very up. The estimations was that the price of the dollar must be 300% more than the current dollar price in the exchange market. But by the improvements and enhancements of the stock exchange market of Iran, a lot of this money went and moved to the stock exchange market and capital market, and we see that there is a very improvement and a very good investment in the production and employment.
The Iranian government may be making a profit by its public offering of remaining state-owned shares, shares of often broke companies. But in doing so, it is giving the people a fighting chance at protecting the value of their depreciating rials, whilst rescuing those companies. Profits can in turn be put into production and industry, therefore shielding the economy against sanctions and siege and whatnot. That's it for today. Thanks for watching from the whole team. Do watch again at the same times next week and each week after, as you never know what's on. And don't forget to leave your comments and topic requests. Bye for now.